Hey everybody, welcome back to the channel. We are back on another episode of Daily Palantir, and we've got two things to discuss today. Number one, we have a new price target by Mr. Dan Ives for $90 on Palantir. So we will be discussing that price target and the implications of that price target. Number two, we have a new $500 billion AI CapEx investment in the United States that is happening. It was announced a couple days ago called Stargate, and I think that is also having some implications for Palantir. We got a lot to talk about. Let's get into it. All right, so before we get into all of the headlines, price action on Palantir has been pretty strong. End of the day at 78.98. Just a couple weeks ago, Palantir was at $63. So a really nice move from that 63 range all the way to 78.98. I think we bottomed at 63.35 in the month of January 14th. And today we ended at 78.98. We are up 7%, almost 8% in the past couple days. Almost closed at $79 today. Got very close at 78.98. But nonetheless, it has been not a bad recovery for Palantir, given we were at 84 in December after NASDAQ inclusion, came all the way back down to 63. Now back here at $78.99. One of the reasons we are up today, 2.74%, is because of Dan Ives and his $90 price target on Palantir. So this is what Dan Ives said today. I'm going to read a little bit from this, or read the report, about a couple paragraphs, and then we'll go deeper into the implications of what this means and why Dan Ives has upgraded the stock. We are raising our price target on Palantir from 75 to 90 as our recent checks and growing confidence in the company's AI strategy is key to the bull thesis for Palantir in 2025. We believe Palantir has a path to become the next Oracle or Salesforce over the coming years, and while the valuation is expensive today, first time Wedbush has actually acknowledged that the valuation is expensive, we see the messy of AI as a core winner in the trillions of AI spend over the next few years. Palantir remains one of our top names sown in 2025 as its game-changing AIP strategy is quickly becoming a key foundational platform for enterprises and heading down the AI use case path across verticals. New and existing customers across the commercial and federal landscapes are waiting in line to sign up for the multiple aspects of the Palantir tech stack as the company introduces new valuable use cases to customers, with more organizations seeking to drive efficiencies off the back of AI, with Palantir leading the charge. We believe the street is underestimating the $1 billion plus revenue stream that Palantir's AIP US commercial business can evolve into over the next few years, and the technology competitive moat that Karp and company have built. We maintain our outperform on Palantir with a new $90 price target. Look, I pretty much agree with everything Dan Ives said. It's hard to disagree with anything he's talking about. I think there are a lot of implications to this concept of use cases that he's talking about that we'll get into in a bit. But essentially, to kind of simplify and synthesize what this sell side report said today, it was pretty simple. U.S. commercial is growing. It's going to grow more than what the street thinks it's going to do. We are updating our price target to reflect the growing confidence we have of Palantir to capitalize on the use cases, which are the internal link to get to that higher revenue growth. He thinks that the U.S. business, particularly in U.S. commercial, driven via AIP, which now is going to start to become more monetizable. A couple of years ago, or basically 18 months ago, Karp said, we don't have a pricing strategy. We're just going to take over the market. Now, Dan Ives and a lot of these other analysts on the street are thinking, okay, not only are they taking over the market, they have the elasticity of pricing power to actually monetize AIP at scale. And if that average revenue per client can start to tick up because AIP is giving value, because companies are recognizing that they need an AI platform on top of the Foundry, or on top of the ontology, which is rooted inside of Foundry, then that can drive more net dollar retention and definitely drive a stronger average revenue per client and overall drive top line revenue growth. So Dan Ives thinks that they can do $1 billion, more than $1 billion, $1 billion plus of revenue in the U.S. commercial business in 2025. Along with that, he also says, quote, new and existing customers across the commercial and federal landscapes are waiting in line to sign up for multiple aspects of the Palantir tech stack. So we don't talk enough about the government business, although the government business is a very, very juicy, sticky part of the business. Donald Trump being elected, he was at the Davos forum today saying that all NATO countries need to spend 5% or more of their GDP on defense. That to me screams Palantir, because if you're going to spend 5% of GDP on defense, it's not just going to be for guns and missiles. It's going to have to be for software, because software is the tactical nuclear weapon, as Alex Karp calls it, in today's day and age. And Europe has had a pretty hostile relationship with Palantir, but inevitably at some point, if they're going to spend more on defense, I think that means they're going to spend more on Palantir. So if the defense business is going to grow, if the commercial business is going to grow, and the overall sentiment for AI is going to continue to get stronger, not just from investors, but from enterprises, governments that need an AI platform, that is where Dan Ives is coming up with this idea that Palantir can get to $90 a share in 2025. So one of the reasons why Palantir moved up today was off that Dan Ives $90 price target. Another reason that I think Palantir has been moving over the past couple of days is the announcement we got 2 days ago from Trump, Larry Ellison, Masa-san, who runs the Vision Fund at SoftBank, and CEO of OpenAI, Sam Altman, for a $100 billion investment that will scale to $500 billion over the next 4 years, called Operation Stargate. These are all 4 of them at the White House 2 days ago doing a press conference about this announcement. Now, why is this happening? And how is this happening? And what are the implications of this happening? Well, let's read a little bit from what OpenAI had to say. The Stargate project is a new company which intends to invest over $500 billion in the next 4 years, building new AI infrastructure for OpenAI in the United States. We will begin deploying $100 billion immediately. This infrastructure will secure American leadership in AI, create hundreds of thousands of American jobs, which is probably why Trump is happy about this, and generate massive economic benefit for the entire world. This project will not only support the reindustrialization of the United States, but also provide a strategic capability to protect the national security of America and its allies. All right, so we are 4 days into the Trump presidency, but this is bullish. This is very, very bullish. We are getting $500 billion. Now, is it actually going to be $500 billion? I have no idea, but this is what the headline says. From some of the most important companies in the world, SoftBank, that wants to double down on their investments in AI infrastructure, Larry Ellison, Oracle, they're getting a lot of new revenue growth for data center spend. And obviously OpenAI, which is kind of the poster child when it comes to the foundation models, ChatGPT, that exemplify what the potential of AI could become for. They are basically saying the potential of what AI could be. They are basically saying, hey, this thing is not going away. It is becoming bigger than what anyone could have expected. We need energy. We need CapEx. We need infrastructure. We need more spend. We need $500 billion freaking dollars to create hundreds of thousands of jobs. And we are here. It is indeed the AI revolution. That is how I interpreted Operation Stargate. Essentially, the idea that some of the world's biggest companies are coming together. They're realizing how important this opportunity is, how much bigger it can be than the internet, all of the different verticals by which this opportunity can expand into. In that particular conference at the White House, they talked about healthcare uniquely as one of the verticals that will benefit from AI. And they're basically doubling down on the AI thesis. And the AI thesis over the past couple of years has been that we are going through a decade-long transformation. Dan Ives would say it's 10 p.m. at a party that ends at 4 p.m. or 4 a.m. And that there is massive, massive growth, massive momentum, and massive opportunities to capitalize on this new reindustrialization of the United States. So the question that we care about as investors are who are going to be the winners? Who's going to win? I think the obvious answer in terms of who's going to be the winner is NVIDIA, right? Like NVIDIA is going to get, I think, a bulk of that $500 billion, even if they only get 10 to 20% of that $500 billion and the rest of the money is in different forms of CapEx. You need the GPUs ultimately to make these data centers valuable, to train a lot of the models that are being created. And I think NVIDIA, especially as they release Hopper and advanced models of their GPUs, they're going to continue to get a benefit from all this CapEx spend. Now, NVIDIA was up 3-4% over the past couple of days. Palantir was up 7%. Why is Palantir up 7% on an announcement around AI CapEx infrastructure when Palantir doesn't build data centers, they don't train any models, and they're not part of the AI CapEx tech stack? Why is Palantir catching a bid? This is how I'm thinking of what is happening right here and how it's playing out. And I'm going to try to simplify this because I've been really, over the past 48 hours, it's just like, as soon as I saw Palantir gain 5% on this news, I was like, okay. So this is what I think is happening. This is how I'm going to simplify it. And this is how I think in the future, we should sort of try to conceptualize the way the market is interpreting Palantir as a company. Now, before I get into my analysis, I just want to say the stock is expensive. I'd rather be conservative and wrong on my estimates if the stock continues to go much, much higher versus be super aggressive and, say, oh no, the stock's cheap, yada, yada, and then wrong when the stock falls, right? Like I'd rather be conservative and wrong versus super aggressive and wrong. Um, but I think the stock is expensive here. At $78, I'm not buying. My latest buy was actually at 65, and funnily enough, I bought it because I needed 20 shares to get a round number on my share account, and I was just so annoyed. I was like, you know what, I'm just buying the shares right here. Ended up not being a horrible buy, right? But I do think the stock is expensive here at 78. 78.98, trading at a 67 times price to sales. I do think, from a conventional perspective, the stock is expensive. However, and it's been a running theme for the past year, that you have to add this however, because from a quantitative perspective, we can't really use the numbers to justify Palantir until we see their growth coming into 2025. But there are qualitative elements of how this stock is trading, and I think this is what the bears have missed out on the story, is they've never really tried to reconcile all the qualitative elements to how a stock trades. They've only looked at the quantitative estimates. And I get it, quantitative stuff matters, numbers matters, growth matters, valuation matters. But when you have a unicorn company like Palantir, there are also other parts of the story to the thesis that can't just cloud your judgment only because of the quantitative aspects that, to be fair, are getting a lot better for Palantir in terms of their increased growth. Just want to give that caveat because I do think the stock is expensive. Having said that, here's what I think the street's thinking. I think the street has come down to the assumption that there are 3 use cases of AI, right? We're talking about AI. All of us are living in this magnificent revolution of artificial intelligence. 100 years from now, people are going to write history books about our time. All of us living right now, when we're all gone, our kids will be reading about the revolution that we were living in. And I think all of us are trying to make sense of it. In my opinion, the street has come to the conclusion that there are 3 major use cases of AI. Number 1 is how to train a car to drive itself. Self-driving, FSD, Tesla, Waymo, etc. Number 2 are robotics. How do we get AI into the physical embodiment of artificial intelligence that can then make our lives better? That can potentially fight the fires in California, that can do your dishes, that can replace back-breaking work at factories. And then number 3 is enterprise use cases. And that's it. And if anyone has the 4th or the 5th, please let me know in the comments. I'm sure there's other verticals, but the 3 main verticals are self-driving, robots, and then enterprise AI workflows, aka agents, which I think we're going to hear a lot more about in 2025. But these AI agents embedded, it's inside of a BP, inside of an Airbus, inside of a Tampa General Hospital. These are going to be where companies realize they can reduce costs, increase margins, increase top line growth, which is great for a price to earnings. It's great for their EPS. It's great for their stock prices. And they will be willing to pay for software like a Palantir to then be able to then generate that earnings growth, which is going to be beneficial for their customers, investors, etc. Now, having said that, why did I caveat by saying Palantir is expensive? Because although it's expensive, I think the reason the street is keeping it expensive is because they've basically come to the conclusion that if Palantir doesn't grow 40, 50%, then a lot of this AI stuff is fake. What do I mean by that? Let me explain. All of these data centers are built to store GPUs and to train models. What is the point of GPUs and models? To make new models that are better, more intelligent, more advanced. We're on GPT-4. We want to get to GPT-5, 6, 7, 8, yada, yada. Why would we want to get to GPT-7, GPT-8? Well, because FSD 13, which I have now in my Tesla, is way better than FSD 8. And luckily, I never had to try FSD 8, but from the people I talked to, the car could barely stay in one lane on FSD 8, whereas FSD 13, I use it every day, and I'm probably going to pay the $99 a month in subscription because I can't imagine my life without it. And it's freeing up my time. It's making me more productive. And so FSD 13 is a game changer. You need to train models to make FSD better. You need to train models to make robots better. When you put the chips into the robots, they need to be trained in a way that they can act like humans. That's the whole point of AGI. And so we need to get more advanced models. And then you need to train models to make sure that when you incorporate a model into the workflow of an enterprise, of a government organization, that those models can effectively balance the governance, the security, and then the overall data of an actual organization to deliver outcomes and ROIs that can increase margins, decrease costs, and overall increase operational efficiencies. Meaning, out of the 3 use cases I talked about, robotics, self-driving, and enterprise AI, 33% of the tangible use cases that I can make sense of when it comes from AI belongs to Palantir. Now, it doesn't exclusively belong to Palantir. There's going to be hundreds of players in the enterprise AI space. But we all know Palantir is one of the main players, and we've seen case study after case study, and we've seen with their 30% growth in terms of reacceleration, the US commercial AI business is growing massively, and it's reaccelerating growth because of how much demand is coming into the company around organizations that are realizing they need an AI platform to change the course of their business and to have some type of transformative software. So going back to my statement, I think the reason Palantir is expensive and continues to be expensive, and as long as earnings are good, will always be expensive, is because the street has come to the conclusion that if one of the use cases out of 3 is enterprise AI, there are not many players that are able to grow the way Palantir's so far shown they can reaccelerate growth and don't have the technology moat that Palantir has, 20 years of building out their patents, their infrastructure, etc., to do what Palantir does. Which means, in my opinion, I think the reason Dan Ives is upgrading it to 90 and the street's getting excited for Palantir is because if Palantir doesn't show that type of growth, there's 2 things that are happening. Number 1, it's a Palantir problem. They're not able to execute. They're not able to get the customers. Someone else is eating their lunch, whether it's a Datadog, Snowflake, Databricks, whatever it may be, right? It's a Palantir problem. Or it's an industry problem, and there's not enough demand for people that want AI in their companies, and therefore Palantir doesn't have a massive market to go after. And if you don't have a massive market to go after, you're naturally not going to be able to grow at the astronomical levels that the street is expecting. I think if the street believes that Palantir is going to be able to fight the competition and they're going to be able to work with the competition, and a lot of people are going to eat in this game. It's not just going to be Palantir, but it's definitely not going to be like anyone's eating Palantir's lunch in the game. Then the second scenario makes a lot more sense, which is that if Palantir isn't able to put up the growth numbers, that means all this CapEx we're spending on AI is irrelevant. It does not matter because there's no use case. And I know a lot of people, think Dan Ives' analysis isn't always necessarily the most in the weeds of Palantir, super, super nitty gritty about the numbers. But the one thing that Dan Ives has gotten absolutely correct, which quite frankly is the only thing that's mattered, ironically, when it comes to Palantir and understanding the Palantir thesis over the past year and a half, are use cases. Are there use cases? And the reason Dan has been one of the best analysts on Palantir is because he talks to the customers and the customers are showing him the use cases. And now he's upgrading the stock because he believes there's going to continue to be more use cases. My point here is that if there are no use cases and Palantir can't capitalize on showing those use cases to different enterprises, then all this data center build out means jack shit. It doesn't matter because outside of self-driving and outside of robotics, why are we training models? What's the point? Why do we need to buy more GPUs? Why do those models need new data centers to be able to train into GPT-7, 8, 9? Like, the reason we're doing it is to get one of 3 things: robotics, FSD, or agents, enterprise AI applications. Yes, we have ChatGPT. Yes, we have these AI apps that you can use and you can talk to a therapist and stuff like that. But realistically, we're not having this massive multi-trillion-dollar AI revolution to pay $20 a month to OpenAI for a ChatGPT subscription. We're doing it because there are much, much bigger use cases. And even to myself, this has been a realization over the past couple of days because I'm like, okay, look, I've justified Palantir's valuation in a lot of ways outside of the numbers. One of them is a Carp, his energy, his excitement, just the willingness to defend the West, and people buy into that mission, that idea. The institutions are getting on board, etc. But another reason could be that the institutions are thinking this is kind of inevitable, that if there is going to be this massive AI revolution, there's no way Palantir can't grow at 30, 40, 50, 60% over the next few years. Because if they're not growing that much, there's just not that much demand. Or, as I said before, it's a Palantir problem. And if we take it's a Palantir problem out of the equation, assuming that Palantir is able to execute, which I think they've earned the benefit of the doubt of being able to execute, then if you assume the industry is going to cater in terms of the demand that's needed for AI platforms, I think the market thinks they're just going to grow into the valuation, and it's probably always going to be expensive for a variety of reasons. But the market thinks Palantir is going to grow. And the reason the market thinks Palantir is going to grow is simply because they've reconciled that if Trump's spending $500 billion over the next 4 years to build out all these data centers, all this CapEx, to get all this training for all these models, all that inference training to make the compute even better and stronger and more sophisticated and really drive the efficiencies that organizations are looking for from these models, that means you need better models, which means those better models need to offer a use case. And it seems like Palantir is one of the only software companies that is actually showing the potential of those use cases, which is why the street is giving them the ability to have their stock go a lot higher, because they realize that that's the biggest use case, enterprise AI outside of robotics and FSD. That use case needs to be implemented into hundreds of thousands of companies across the world. If the demand is there from those hundreds of thousands of companies, Palantir has 600 customers. One day they might have 6,000, 10,000, 60,000 customers, which means we believe the stock is going to grow because the company is going to grow, and that's why they're paying a premium for this stock. That is how I'm reconciling all this $500 billion AI CapEx demand. Like, the derivative effect of all of that is that demand must be existing for the software providers, because the software providers are one of the biggest use cases of training the models. And we wouldn't need to have better models if we wouldn't have more demand for AI. And then Palantir is just one of the suppliers for one of the best AI platforms that exists on the market. Those are my thoughts. Let me know what you think. This is my interpretation of the $90 price target we got from Dan Ives and the Operation Stargate that Trump announced for $500 billion. It does seem like Palantir has the ability to potentially grow 40% or more going into 2025. I will link that video below in the description as well for those that want to see my analysis from last week on why I think Palantir can get to 40% growth. But if they can do it, and we got 10 days left until earnings, then we are likely going to see more momentum in the company. Is the stock expensive? Yes. But is the market perception of what Palantir can do strong as well? Yes. And because of that, I think there's a lot of room for Palantir to continue to do well in 2025. Thank you, everybody. Hope you enjoyed. I'll see you guys in the next one.